how important is it for sole proprietors, S corps, 1099s to keep track of proper bookkeeping, tips on bookkeeping? Because I always preach about how people just kind of piss money away without being organized because they're so used to being a W-2 employee where all that kind of stuff is just, taken out of the paychecks and things like that, and they have little to no deductions, so they don't
Yeah.
even think about it,
Yeah.
right? And I always preach about 1099, or entrepreneur having the ability to pretty much take advantage of some of the biggest tax loopholes in the tax code. Can you just kind of cover how important it is, number one, as far as documentation, things like that, and how much? Because I want to up urgency here so that everyone is acting like a professional. How
Yeah.
important is it to start really taking seriously documentation, having a system down, bookkeeping, all these things, and then what are some little juicy things that they're missing out on?
Yeah.
Like some often missed things that they're not even thinking about.
Yeah. So documenting your expenses is more important than even having an accountant. It's more important than even having an accountant. It is how you avoid giving money to the government that you can never get back. That is how important documenting your expenses are. As soon as you pay the IRS, that money is gone. And you being self-employed and documenting your expenses is exactly how you protect yourself from giving that money to someone who's never going to give it back to you. So what I mean by that is everything that you know that is business related needs to be tracked. And it doesn't have to be in a crazy program. You don't need to go, and if you're not ready yet, you don't have to have QuickBooks. Do I recommend having QuickBooks? Absolutely. Because most business owners like Danny, who have figured out how to be successful, they're documenting all of their expenses in QuickBooks. Every time his card is swiped, every time he has a transaction, there is someone on the back end that's categorizing that transaction as either marketing, materials, meals, entertainment. Someone on the back end is tracking every time he swipes his card because Danny doesn't want to miss a deduction. And he will let his CPA determine whether it's deductible or not. But what he's not going to do is he's not going to miss an expense. Documentation is so important, especially when you guys are eating out. Most people believe that you're just supposed to save the receipt. I believe in saving the receipt, taking a picture of the receipt, but also putting two important things on the back of the receipt because I've been in so many audits. Two things that the IRS looks for on the back of a receipt are who you ate out with and what was discussed. There's three other things that are already covered for you: the time, the place, and what was spent. Two things that are not covered for you. And unless you're documenting them somewhere, you need to have them written on the back of the receipt. So I recommend downloading the app called Hurdler, Hurdlr. Yes, there's no E in there. Hurdlr. It's spelled weird. Hurdler. Hurdler allows you to sync up your bank accounts. Danny, this is something that you probably wouldn't need to do because you already have your bookkeeping on point. This is where you can sync up your bank accounts and you could take pictures of every time you have a transaction. So not only will the transaction show up on your card inside of Hurdler, you could take a picture and it saves it right there to the transaction. And then at the end of the month, it'll give you a statement. So that way you have your photos of every receipt and you have the business expense. So if you ever get into an audit, there is no fighting or being scared. It is simply showing your information because you did exactly what you were supposed to do underneath IRS tax law. So the most important thing about this whole thing, like Danny said, is documenting your expenses. It's more important than having a tax strategist, a CPA, is documenting your expenses. It is directly what helps you save your money. Yep, that's a great point.
Just to piggyback on that, one point as well, when you're talking about food and meals and maybe entertainment as well, how much, and this won't be obviously black and white, how much would you say someone typically who's an entrepreneur, who's running 1099, or they're transitioning into the mindset of an entrepreneur, how much money do you think people leave on the table? And I know it's relative to income, but how much money do you think people leave on the table without being organized, without even being aware of these things? What would you say to that?
If you're a six-figure earner, you're easily leaving 10 to 15,000 on the table on a yearly basis. On a yearly basis. I mean, there's just so much that you're not thinking about. I mean, down to when you choose whether or not you want to buy a car or lease a car. There's just so many different options you have underneath the IRS tax law. So I just feel like outside of just leaving expenses, it's also strategies, right? I have clients who they have 12 and 14-year-old children who are helping them out in the business, whether it's answering the phone or drafting emails, but they had no idea that they can pay their child up to $12,200 without their child needing to file a tax return. That's money left on the table to me, right? So I'm all about making sure that I'm leveraging everything that's at my disposal and I come up with the right strategy for myself. And a part of that is making sure that I'm documenting everything so that my CPA can help me in figuring out what is the right strategy based on my expenses. Yeah.
So I have a quick question. Meals and entertainment, you can only write off 50% of the total expense, right?
Yes, for meals. Entertainment is no longer deductible. However, marketing is 100% deductible.
Okay, and cell phones, you can only write off a percentage because the IRS says, well, you're using your cell phone for personal purposes too, right?
Yeah, so the percent that's business use can be deducted. That's correct.
Okay, and since we're all pretty much working from home, we can write off our gas, electric, our garbage, our I would even try for water and sewage, right?
Absolutely, throw it all in there. So how that works is, if you guys just want to write this down, I'm kind of giving you some strategies now. How the home office deduction works is, and I'm just going to give this one to you guys. You're going to take the square footage of your entire home, okay? So the square footage of your entire home, let's say it's 1,000 square feet. And then you're going to take the square footage of your home office. Let's say it's a 10 by 10, so 100. And then you're going to divide that square footage of your home office by the square footage of your entire home. So if I had a 100 square foot home office divided by 1,000, what's that, 10%? So if I have a mortgage bill, if I have HOAs, if I have electricity, water, cable, gas, I get to deduct 10% of all of my home office expenses. Also, if I purchase some things that are inside of my home office, such as my copier, my printer, my staple, fax machine, maybe I decided to buy myself a Yeti, whatever it might be, those become business related, right? As long as it's linked to the pursuit of income and I'm documenting my expenses. So yes.
Thank you.
That one too, Karlton. Great question, Lydia.
That was a great question.
50% of meals, 50% of meals. Is there a trick to where if you word it that it's now team building, food? Now that becomes, is that 100% deductible?
That does become 100% deductible. I love these moments, like when people like are getting it. Like, I love that. It's the funnest part of tax strategy.
That's huge.
Yeah.
Awesome. Thank you.
Also, guys, if any of you guys are thinking about getting any new vehicles, please make sure to talk with me or talk with your accountant first, whoever you feel most comfortable with. Because if you purchase a vehicle that's over 6,000 pounds and you're looking for a really nice write-off, we can write off the entire vehicle's purchase price in 1 year. Whether you put a down payment on the vehicle or you bought the whole thing outright, I can write off the whole vehicle's purchase amount in 1 year. If it's over 6,000 pounds. If you guys need me to send you a list of those vehicles, I can share that with Danny.
Would you want to depreciate them?
Depends on what type of write-off you're looking for.
Okay.
Mm-hmm. Yeah.
Hi, Karlton. I have a question.
Right, Brenda.
So, Danny just finished talking about team building. Can you, what's the difference?
Yeah.
Because the two things that we're supposed to, who you ate with and what was discussed.
Mm-hmm.
What do you mean by team building?
So what he's talking about is, rather than having just a meal where he's discussing business with, friends or other family members or people he wants to do business with, he's talking about doing team building where he's putting on a marketing event. It's more social. He's going to advertise it. And when he does this makes the whole entire meal 100% deductible, not 50% deductible. So all the food and all the materials that he might buy.
Thank you so much for that. And then my question was about, can you talk a little bit about the mileage, maybe,
Yeah.
from work to home and what we can write off?
Yeah, of course. So how mileage works is you're able to deduct 57.5 cents per mile that you drive that is business related. Okay, so once you get into, let's just say that your employer has a office that's about 5 miles away, and then you drive into that office. Once you get into that office, wherever you go from that office now becomes business related. You getting there is not considered an ordinary necessary expense, but as soon as you're there and wherever you go is now business related. So I always recommend just having the app MileIQ. If you have Hurdler, I think Hurdler syncs with MileIQ, so it's in there. But you want to track all of your miles because you get 57.5 cents. So the reason why we want to track all of our miles is because at the end of the year, we can determine whether or not we want to take mileage or if we want to take actual expense, right? So actual expense would be, writing off the actual expenses that we have of our vehicle, cars, tires, gas, the payment. So, yeah. That was a good one, Brenda. Of course. Thank you.
Stop at the office before you go anywhere, kind of thing.
Yes, there you go. Stop at the office before you go to work. That's 100%, or before you go work. Yes, going to the field. Good one. Any other exciting type of questions? Yeah, Mar.
So I had a question about basically business trip expenses.
Okay.
Does it have to be formal or could it be informal as long as you get documentation of the informal amount?
I don't care if you leave out with no dress shirts or anything on. It could be as informal as you want it to be, as long as it's a business trip and you're documenting it correctly. Let me give you an example. So I'm a real estate investor. I have a few different properties. I have a duplex in Long Beach and I have some property in Fort Lauderdale, Florida. I don't have any property in Hawaii. So what I did though was I set up a management company for myself because I manage my property in Long Beach. And since I'm a real estate investor and I have a business, I decided to contact real estate agents in Hawaii before me and my fiance went out there. So what I did was I contacted 3 real estate agents. I had them all email me a list of properties. When I got into town, I met up with the real estate agent, went to coffee, took a picture literally at the Starbucks with him, and then I went and looked at all the properties. I got business done. I documented everything. My entire trip was a tax deduction, my hotel, my Ubers, my cocktails, right? So you nailed it on the head. Documentation is so important. And Danny is going to make sure that you guys are documenting everything, or I will.
Thank you.
Of course.
Hey, Karlton, thank you so much.
Yeah, of course.
I know a lot of people on our team are 1099, but there are also W-2 employees. How would that affect the strategy of being an S corp?
Got it. So I love when my clients are also earning W-2 income, because if I am doing the right strategies, I might put you at a loss. And the loss can offset your W-2 income, meaning that we can adjust our withholdings with our employers, bring home more W-2 income, depending on how many write-offs that we take. If we're not as aggressive on taking write-offs, then it's just like I said, the W-2 side kind of stand alone, and then you have your 1099 side that we need to offset. But all of it joins together and is gonna get taxed. So the goal would be to try to reduce your 1099 income as much as we can, since you're already having taxes withheld as a W-2 employee. The only time this cross blends is when I create a loss for you. If I create a loss, the loss is gonna offset your W-2 income, and sometimes we want that. So, did I answer that question?
Got it, yep.
Okay. Just wanted to make sure I answered that. Cool. Does that make sense to everyone though? Does that make sense to everybody? Because the way I answer that a certain way. Does that make sense?
Completely.
Okay.
Awesome, guys. I hope you guys can understand the value that Karlton brings. You guys understand the very beginning, he's talking about tax strategy, right, versus tax planning. And there's also something that I learned from him too, just by watching some of his videos and content, is when your tax preparer is working with you, or your accountant, maybe your H&R Block person, right? That's called tax compliance, right? They're not being very creative. There's nothing wrong with being creative, as long as within the confines of the IRS tax code, which Karlton understands that, and I'm sure we agree with, is the IRS is basically telling us how we can take advantage of the tax code. It is an incentive.
Yep.
Those are incentives, and if you're not utilizing the incentives, you're going to be penalized for it.
Yep.
So I appreciate you, brother. I'm excited to actually. I'm putting together my stuff to have Karlton look at, because I called him. I'm like, you know what? I don't think I'm at 100% here. So
Yeah.
I'm excited to actually work with him personally. So guys, was this helpful? Yes. So just giving you guys kind of a taste, guys, right? Welcome to the world of business, right?
Yeah.
You gotta put on our big boy pants and big girl pants and treat your business seriously, because this is real money being lost. I love what he said, Karlton, when you said once you give money to Uncle Sam, that's it. You're not. I mean, that's it. You can't get a refund. I mean, well, you can get a refund, but that's a whole other subject. But you're not getting it back.
Right.
So, Karlton, any closing remarks before we call it a wrap?
No, I just want to say thank you guys for having the right energy today. Talking about taxes can be boring, weird, uninteresting. As you guys can see, this is totally not uninteresting to me whatsoever. I teach people how to build wealth, and there's a number of different ways you can go about doing it. But there's one thing that we all know is that taxes is your biggest expense. And until you figure out a way to reduce it, you will always be paying into it. So my goal is to continue to educate you guys. If you allow me to, feel free to follow me on Instagram. I put my link inside of the chat room so you guys can schedule an appointment with me at your own time. They're free. I'll assess each and every one of you guys individually. We'll have a conversation. We'll get real with each other, and we'll figure out if it makes sense to work with each other or not. So take advantage of that. My link is there, and I just want to say thank you guys for the time.